Okay, we're going to get started. Good morning again, and thank you guys for joining this morning. My name is Karen Mitchell. I am a realtor here in South Florida. I work for Location Real Estate located in Pompano Beach, Florida. I have been in real estate here since 2016. Prior to that, I was an agent in Maryland. I got my license there in 2012 or 2013, I believe. I moved here to Florida in 2014. So I've been here for quite some time now. I consider myself a Floridian at this point. I'm originally from Jamaica, so this is home. I started these seminars, back in Maryland, because I found a need for people, for first-time home buyers who just didn't understand the process and what they were getting into. And when I purchased my house in 2011 in Maryland, I had a really bad experience. I didn't have a realtor. It was a new construction. And I thought maybe throughout the process, having someone else, a realtor, would have helped me. So I think that was right after that was when I decided to get my real estate license. I figured if I can help someone go through this process and not have to go to the strain and the stress that I went through, then I would have done something good. So I just wanted to pass on and just be of help to anyone that needed it. Typically I do these in person. Because of the pandemic, we moved to the Zoom meetings, to the webinars. We started back up, I guess in May or June, Dorian, something like that.
Right.
But prior to that, we were doing them in person. We did them once per month at my office in Pompano Beach. The last one got canceled in March. It was supposed to have been a lunch and learn, but that was canceled because of the COVID-19. So typically I would have my lender, which is Dorian. I would have a home inspector, which would be either Max Home Inspection or Young Home Inspection, and we would have a title company. And we would have a title company, which is Title Experts of South Florida, Nelta, and Josie, the best title company in South Florida. We also added a finance person. His name is Andrew. He's a financial advisor. We added that for people who probably would need assistance with saving for down payment, saving for college for their children, any financial help that you would need. And we added Andrew to provide that to our attendees, and eventually attendees who become our clients. He would provide financial support to them. And of course, all of it's free of charge. We do not charge for the webinars. We do not charge for any advice we give you. All of this is a community effort that we've put together to help members of the community. So that's a little bit about me and my background. Like I said, I've been here in Broward for a while, selling homes. With COVID-19, it's becoming, we've had to switch to what is now our new norm. Interest rates right now are really, 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 really low. If you're thinking about purchasing, now is the time to take advantage of that. I don't want to take up too much time with the realtor portion of this. Normally, the seminars last about 2.5, sometimes 3 hours, and I talk through and in between the business partners. But I want Dorian to have the time with you guys, because the most important thing is knowing what you need to do to get pre-approved for a home. Now, my thing is getting educated on the process. It's not just about, oh, you want to go buy a house, let's go. and we start looking. No, you have to understand what the process is. We also work with people from start to finish. So if any of you on this webinar today decide to stick with this process, Dora and I will be here with you from start to finish, whether you are ready to buy today, tomorrow, next month, or next year. We do not leave you. You now become our client, our potential client, if you so choose to have us help you with this process. So if your credit score is not where it's supposed to be, it's fine. We'll help you figure out how to get there. And once you get there and you're ready, we'll help you do that. If you don't have enough down payment right now, there are some cities that have money. We can help you figure out how to get the down payment assistance. If you need help with saving, we can help you figure out how to do that to get to save the money that you need. And of course, depending on the seller, we can get you some closing cost assistance. So it's all about educating the consumer. It's all about getting you ready, getting you prepared for home ownership. And it's a journey that we all take in some point. It's not something that happens overnight. So I just wanted to make sure you understand that part. So without further ado, we're going to introduce Dorian. Dorian is with Fairway Independent Mortgage Company. Like I said, he's been a business partner of mine for some years now. He's very knowledgeable in the field. In the questions you have, he can help you. I've seen Dorian perform some serious miracles, guys. So don't think that your situation is dire. Please don't tell yourself you can't, because you can. It just takes some steps and it takes some doing. And Dorian is the man to do that for you. So without further ado, Dorian, you have the floor.
Thank you, Karen. And good morning to everyone out there. Thank you so much for attending. And yes, I work for Fairway Independent Mortgage Corp. I've just to give you a little bit of background, I've been in the business now for 15 years. And my bread and butter, the thing that I enjoy doing the most of this job is helping first-time home buyers achieve that goal of home ownership. I prepared a slideshow that I'm going to share now, Karen, just to help you guys understand and kind of visualize what's required and the steps to purchasing a home. So
you have the ability to share. I gave you the ability to share, so you can go ahead and take over the screen.
Okay. Can you guys see the screen now, or?
Can everyone see? I can, so I'm assuming that everyone can.
Okay. Okay. Perfect. Let me move this. Okay.
Thank you, Ashley.
All right, guys. So our commitment to you. So purchasing your first time is actually, it's a very exciting time, especially nowadays. It can be quite exciting. But it can also be quite stressful. So my job here is to try to make this as least stressful as possible. Once we're done with this presentation, I'll give you guys all my contact information. So in case you guys want to go ahead and submit your application today, I can show you exactly how easy it is to apply and get this process started. So what we're going to be discussing today is the benefits of home ownership, preparing your loan application, home financing options for first-time home buyers, and choosing a loan that's right for you. Rent really adds up over time when you look at it. I set an example here, $900 a month, but honestly, you guys know, if you're renting now, that it's very hard to find a rent at $900, but just $900 is over 30 years, it can add up to over $300,000 in that time frame. And you can actually buy for right around the same amount per month, and actually end up paying less over time. There's plenty of benefits that come with home ownership, obviously, as compared to rent. One of those being obviously the appreciation that you gain when you're paying down your principal. You're gaining equity and you're gaining appreciation in your property. Buying real estate is still the number one source of wealth in the United States. So mortgage payments can help you obviously build equity in your home. There's also benefits on your taxes, the mortgage interest that you pay. on your taxes, helps to reduce your tax liability. And then the renovations and upgrades that you do your home, all that stuff is increases the value in your home. So you're not throwing money away when you're renting, and also when you're doing renovations or upgrades to your home over time. That actually increases the value of your home as well. So the things that you should know before you start looking at properties is exactly how much can you afford, and how much of a down payment can you afford. Will you be making, will you be able to make your monthly mortgage payments? And how long do you plan on owning that home? And are there additional costs of owning this home that I should consider? Those are all questions that, I can help answer for you. And some questions that, you kind of want to ask yourself as well. And what does a mortgage payment consist of? So a mortgage payment consists of principal, interest, taxes, and insurance. When we determine how much you qualify for, the way we do that is we look at your income, we look at your debt, and we look at the potential mortgage payment that you might have. And we determine how much you qualify based on the potential mortgage payment, versus how much of that goes, how much of your income goes towards paying off that mortgage. So those are all things that we analyze, and I'm able to tell you how much exactly you can purchase. So what is amortization? So amortization is repaying your mortgage loan with regularly scheduled payments of both principal and interest. Your amortization term is the length of time required to amortize the mortgage loan, expressed as a number of months. A typical mortgage is 360 payments, which is 30 years. Although most first-time home buyers, or most buyers, they don't actually keep the same mortgage or even stay in the same home over that 30-year period. But just so you guys know, if you hear the term amortization, that's what it is. And most mortgages are 30-year mortgages. What's the step to buying homes? So this is where this is what it takes, and these are the process of buying a home. So the first thing you want to do is get pre-qualified. I'm going to request documentation such as your pay stubs, your W-2s. I might even request your tax returns, bank statements. Those are documents that I'm going to need to be able to determine how much you're qualified for. Second step of that process is meeting with your real estate agent, which in this case would be Karen. Karen would ask you what type of home are you looking for, what area are you looking for, just questions that she needs to know to help you find the right home and one that's within your budget. Then Karen would negotiate the purchase price. So that's something that that when you have a realtor like Karen, you don't have to worry about negotiating. You just, she'll negotiate for you. That's the beauty of working with a realtor. Earnest money is cash. So when you make an offer on a property, if your offer is accepted, one of the things you're going to need to do is you're going to need to put a deposit on that contract. In Florida, the contract is not valid unless there is a deposit holding that contract. So that deposit can range anywhere between $1,000 to $5,000, and then sometimes even more than that. That's something that's also negotiated, and you can discuss that with your agent. Once the deposit is placed in escrow, you're going to do inspections on the property, and the inspection is not an appraisal. A lot of people confuse an inspection with an appraisal. An inspection is done by a certified home inspector, and he's going to go in there and tell you if there's anything wrong with the roof, the foundation, the structure of the property, if there's mold, if there's termites. Those are all things that an appraisal will not tell you. That's strictly what a home inspector does. So that's a big thing. So once you've done your home inspection and you've determined that the property is suitable and you want to proceed, then we'll go ahead and submit your loan. We'll order appraisal, we'll order title on the property, make sure that the title is clean and transferable and insurable. We're going to send you a loan estimate, which is a breakdown of your monthly costs and all the disclosures that are needed for you to sign. Your loan will then go to an underwriter. What the underwriter does is determine that the information that I provided to the system, the way that I calculated your income, the way that the assets that you have in your bank account. They're going to verify all that information and make a decision as to whether you're still approved or not. So that's part of what I do, and the reason why you know, I've been in the industry for so long is because I do a very thorough job of going deep into your financials. I'm going to go into your bank statements and see if you have any large deposits that that need to be explained. If you have, you know, if you're making commission income or bonus income, I'm calculating that accurately. We have all the tools here at Fairway to make that to make those calculations before you get into underwriting, so that there's no issues when you're coming out of underwriting. Once the underwriter approves your loan, they will issue then a final loan approval, and then we will then send a closing disclosure. The closing disclosure and the loan estimate, those are two documents that they both tell you what you're going to need to bring to closing and exactly how much your monthly payment will be. The difference is that the loan estimate is just that. It's self-explanatory. Loan estimate is just an estimate. The closing disclosure is the actual final figures that have been finalized with the title company. And you know, at that point, we've already identified what insurance you're going to be using for your home. We've already locked in the interest rate, so we know exactly how much your payment is going to be. And we've already done all the figures to know how much you're going to need to bring to closing. That's what a closing disclosure is. That document has to be given to you by law at least 3 days before the closing date. So there are no surprises when you get to the table. This was enacted after the financial disaster of 2008. A lot of laws were passed to prevent basically surprises during the loan process. And this is one of those things. The closing disclosure will be given to you at least 3 days before closing. We will then send the closing documents to the title company. They're going to prepare for you to set a time and coordinate with you to go to the title company to sign all the closing documents. And then you will then wire your funds to the title company and sign all the documentation there. And now you officially become a homeowner. And that is the process of buying a home. So a couple of things that you should do. You should keep all the original, your pay stubs, your bank statements, and other information, important information. You should keep those originals in your possession. I only want copies of it. We need you to provide the earnest money deposit. As I mentioned earlier, for a sales contract to be valid, you have to put a deposit in escrow. So make sure you make that deposit from your own personal bank accounts or from a gift. It cannot be done in cash. I see a lot of people who are who may have won, you know, some sort of lottery or some they have cash at home, whatever, however they got it, I don't know, and that cannot be used. So if you do have cash at home, talk to me up front. Let me know that that's what you plan on using for closing, and I will advise as to how you know, we need to proceed with that. So if you're going to be receiving a gift at closing, all of our loan programs here, whether it's FHA, conventional, or VA, they allow you to receive 100% of the funds for closing can come from someone else. You can be gifted the funds for closing. Notify your loan officer of any employment changes as soon as they arise. If you plan on switching jobs, that's not a deal breaker. I just need to know where you're going to work. And I need to see if you have some sort of offer letter that's been executed. You know, things happen, and unfortunately, if you get to the point where you're in the loan process and unfortunately you're furloughed because of COVID for some reason, or you're let go, you know, if you found another job, we can work with that. So don't get discouraged if you just started a job, or you know, that's something that that we can work with. So, and be aware, don't pull your credit. That's big thing. You know, just be aware that we're going to run your credit, but don't run your credit with anybody else during the process. So a couple of don'ts. Don't close any or open any bank accounts or transfer money between bank accounts. That's something you should not do. Deposit any money outside of your automated payroll. Do not deposit cash, as I was stating earlier. Cash cannot be used for the most part. We don't know where the money's coming from, and so any cash typically cannot be used. Do not change employers without inquiring the impact this might have on your loan. And do not make major purchases prior to or during your contract, such as buying furniture, for example. Don't go to Rooms to Go or City Furniture and spend a bunch of money on buying furniture. That could be a deal breaker, so don't do that. Now, getting pre-qualified. Getting pre-qualified involves the process of determining how much home you can afford before you start shopping for homes. And once you find a property that you want to make an offer on, you will be provided a pre-qualification letter, which shows sellers that you're serious and you're a viable buyer. So that's what getting pre-qualified means. The type of loan programs that we do, we have fixed rate mortgages. As I said, they're available in 10, 15, 20, 25, and 30-year terms. And this, the 30-year term has the lowest payment, but it might not be right for everybody. If you want to pay off your home sooner than the 30 years, we do have other options available. And if you qualify for that, obviously with the higher payment, that might be a better option for you. Adjustable rate mortgages. So, adjustable rate mortgages, that's not something that we really recommend in most cases, but it is still available. And that means that your mortgage will adjust depending on some sort of index and a margin. And if that's something that interests you or you'd like to learn more about, I'd be happy to explain it. Conventional mortgages. Conventional mortgage is just, it's any non-government type mortgage. Usually will be a Fannie Mae or Freddie Mac mortgage. Those are Fannie Mae and Freddie Mac. If you look them up, they're the largest investor of mortgage loans in the country and have been so for quite some time. They're a quasi-government agency, and Fannie and Freddie are the type of conventional loans that we do. FHA is a government type mortgage. So FHA typically is something that I recommend if you're maybe have some challenges with your credit. Anybody who's on the lower end of the credit spectrum usually would have to go FHA. And it's not a bad mortgage. It's actually really, it's a really good mortgage. It's government insured. And so because of the fact that it's federally insured, interest rates are typically lower on FHA mortgages than they are on conventional mortgages. The only downside to an FHA mortgage is the mortgage insurance, which is on the loan for the life of the loan. So that's one thing to note. And the other type of mortgage we do here is VA mortgages. If you're a veteran or you're the spouse of a veteran, you may qualify for a VA mortgage. VA mortgage, you can finance up to 100% of the purchase price with no mortgage insurance, no down payment, and the closing costs can either be contributed by the seller or you can receive a gift for the closing costs. So you can literally come in with absolutely no money on a VA loan. It's one of the best loans out there. If you or anyone you know is a veteran and they're thinking about buying a home, let us know. I'd be happy to help. There are many home financing programs developed for first-time home buyers available through your city, county, or state. And at Fairway, we can help you review available first-time home buyer programs in your area to help determine which one might be right for you. There are some down payment assistance programs, and that's what this is referring to, for first-time home buyers. In Broward County, Miami-Dade County, wherever you're located, some of these down payment assistance programs are specific to a county or a city, such as Hollywood has its own program, Wilton Manors, Davie. These are all Miami Gardens. City of Miami. All these cities have their own down payment assistance programs that we can use. There's also a Florida-based down payment assistance program, and you can actually combine different ones. And what we do here is once I analyze your income, I can determine if you qualify for any of those programs. They do have income limits and they do have purchase price limits. So I help you with analyzing your particular situation to determine which program is right for you. So when you do decide to purchase your first home, you want to work with an experienced mortgage professional like myself. You want to get educated about the mortgage process like you're currently doing, which is great. And you want to know how much you can reasonably afford. You want to get qualified and see which of the loan programs that I offer are good for you. And that would also depend on generally how long you plan to stay in your home. If you A lot of times, I find that with buyers, what they qualify for may not always be what they want to end up paying monthly. You may qualify for more than what you actually want to buy. And I find that what I do is I just ask you, hey, look, this is how much you can qualify for. You don't have to buy at this price, but how much are you comfortable paying? That's a question that a lot of mortgage lenders don't usually ask. But that's something that I do to help you determine what's the best type of mortgage for you. And I do have an application, and if at the end of this seminar, if you would like for me to send it to you, I can. You can actually also search for homes on there if you'd like, and it's co-branded with Karen's information. You can also submit your application through there. So just give me a shout. This is my information, my phone number, my email, and let me know how we can help you out in getting pre-approved and knowing what the next steps are for purchasing a home. So any questions anybody has?
So we we went through that pretty quickly, but if you guys have any questions, because this is really what this session is to answer any questions that you have. So anyone has a question, Annette, go ahead. You can unmute yourself. Where are you? Annette, go ahead.
Okay. It wasn't allowing me to unmute. Okay.
It gets funny sometimes. Go ahead with your
Not
question.
a problem. I have a couple of questions, right?
Go ahead.
And so, like for me personally, I started thinking about trying to get myself in order for home purchasing like in February, right?
Okay.
And so then I had recently went through a bad experience where my credit score tanked and everything. And so I had found out that I found out some preliminary information. If you want to look at purchasing, the main thing was that if I was looking at FHA and I was looking at any kind of down payment program or whatever, I needed to at least make sure I had at least a 580. At the time, I was at a 500 score, okay? So, because everything had tanked. So I started working on that and stuff like that. Right now, I'm about at 633. And so when I went back and started searching again, I was hearing stuff about now due to the COVID that the parameters around that have changed and that it's no longer the 580. Now you need to have 680, 640. So can you talk a little bit about that? And if that has changed, are there any lenders that are still out there that will work with you at a 580 as before? Can you share light on that?
For sure. Yeah, so that definitely, once COVID hit, a lot of investors actually got kind of panicked and they raised their minimum credit score requirements. Now, FHA has not raised their minimum credit score. This is a lender overlay. So a lot of lenders have raised their minimum credit score standards from, whereas before you can actually buy with FHA with a 500 credit score. So between 500 and 580, you can bring 10% down and you can purchase with FHA. Between 580 and up, you can go with a 3.5%. Now, I would tell you 90% of lenders have raised their minimum credit score to 620. Currently, we're at 620. Fairway is currently only doing bars that have a minimum of 620 credit score. And I will tell you one thing, the lenders that are doing credit scores under 620, the fees are it is so expensive to obtain that mortgage that it probably is a good idea to work on your credit to help bring it up above the 620 mark, because under a 620, I mean, the pricing is just it's very expensive to obtain that mortgage. So I wouldn't recommend it. I would recommend definitely trying to work on your credit to get it at 620 or above. because, you know, it's going to cost you dearly to get anything under that. And I don't know where you're checking your credit score, but I will tell you that if it's Credit Karma, those
The
aren't the
numbers are
same.
different.
Yeah, very, very different. The
They're
only
not,
service,
they're not accurate.
yeah, the only service that I was actually shocked to find that I actually had the same scores as the service called myfico.com. So
Yes.
myfico.com is actually very
The
accurate
best?
with, yeah, that
Okay.
they're very accurate with the mortgage scores that we use. I mean, like to the T. So I would try them and see where you're at there. And, you know, depending on what is actually hurting your score, and maybe it can be worked on. You know, we have credit simulators that I use as well that are pretty accurate. So if there's something you need to pay down or pay off, I can tell you what it is that needs to be done to bring your score higher and help you qualify. But myfico.com is really the best one that I've seen to help you look for your score. So
Thank you for that information, because I now have Experian, TransUnion, Equifax, all three, and I just found myself spending 29 on one and 29 on another. I'm like, what am I doing?
No, Experian has it now, I think 29 for all three, because I received an email just recently that they're doing 29 for all three with the score, right? Whereas Experian is 29 by itself, and I have Experian. And I used to have my FICO score on myfico.com as well. And I believe that was either 39 or 49 for all three scores at once.
Okay, so I'll go ahead and I'll do the myFICO, because I was also thinking about why do I have three and trying to finagle and all these different fees between the three credit bureaus. You know what I mean?
yeah, no, no, it's and then, you know, one other service that is really good too. If you don't really care for your score, you just want to know what's on your credit, you can always get a free one free annual credit report from annualcreditreport.com. And it won't tell you the score, but it'll tell you exactly what's on your credit, and you can go on there for free and pull all three bureaus once a year. So, but again, for scores, yeah, Credit Karma and all those, they're more like advertising agencies. If you notice, when you log into Credit Karma, they're already, you know, they're suggesting credit cards for you to use, and they get paid by you clicking on those and applying for those credit cards. So they're more like an advertising site. And so with mortgages, you know, the way that we score, the type of scoring model that we use is a little bit harsher than what it would be if you were to apply for a credit card or a car or something like that, because it's easy to you know, repossess a car or close down a credit card if you don't pay it, but it's much harder to foreclose on a mortgage. So for that reason, the scores that we use are a little bit tougher on scoring. So yeah.
And now that you're saying that, in one of the reports, I think it's Experience on. It's not TransUnion. It's the Experience site. It has a score that says mortgage score, auto score, credit card score. Does that mortgage score mean that although your score may be 630, but if your mortgage score says 580, you're 580, that is what you're going to be looked at?
Yeah,
I was curious about that.
Yeah, more than likely, yes. Yeah.
Okay.
Yeah.
Okay. And I'm going to bring up one last thing about that, and I'm going to let somebody else give a question. Since you mentioned about building the credit, because I was doing things where they were recommending pay this card down, pay that, whatever. And I was doing a Lexington law, but I got out of it because it was taking so, like, they just make you pay a lot of money each month. So I'm just doing it on my own. But someone had told me about trade lines, but then when I started doing research on it, I was told, by the different videos I watched, that people were saying don't do trade lines, because now with COVID, that the mortgage companies and lenders have something else they look at in the credit report, that they have a way of seeing if you, so I want to know if you heard anything about this. They have a way of seeing if you have a authorized user type of account versus you actually building your credit or doing certain behaviors that show that your credit increased. I don't know if you know anything about that.
So yeah, you know, the guidelines, and this is not just a COVID thing. I mean, this has always been the case that banks don't want you to add trade lines to your mortgage, excuse me, add trade lines to your credit, you know, just to boost your score. What the part of what the underwriter does is analyze your credit report and determine if your score is based more so on the trade lines that you've added as an authorized user than your actual personal you know, payment history. But it's honestly it's underwriter discretion. It's not, and it's always been there. That's never been something that that the banks usually allow. But in my experience, I've never had an underwriter tell me, oh, you know, this person doesn't qualify because they're authorized users on this card and whatnot. But I will tell you this though, adding a trade line to your credit, it doesn't really boost your score. I know that if you add a trade line, you'll see on, for example, Credit Karma, that it'll say your score shot up 70 points or 100 points for that trade line. But when you really pull it, you know, when I pull it, I don't see those jumps. And I think it's because those reporting agencies or that service, it doesn't differentiate between an authorized user and an actual owner of the account. But when we pull the credit report, it does. We can tell clearly that you're an authorized user, it's not your account. And we can also see when it was added. So I would tell you that you know, it might boost you a little bit, but you know, I think I've heard that adding those trade lines can cost thousands of dollars.
Mhm.
I wouldn't think it's worth it to really add them. It's not going to boost you that much. So, you know.
Thank you.
Yeah, to piggyback on what Annette said, I did hear that they were no longer allowing people to say, if I have a credit card, add my next door neighbor on it. It wouldn't help him it wouldn't help him just by adding him to my credit card. I did hear that at one point. It was some time ago that they had stopped. Mortgage companies had stopped using that, or they had stopped taking that into consideration.
Yeah, I mean, it could you know, if we look at a borrower's credit report and the only trade lines that he has are authorized user accounts, that's a red flag. You know,
Okay.
and that will probably get flagged, and the underwriter might say, hey, this is not a true reflection of his credit worthiness. All of his accounts are authorized users, so we don't know if this person actually is you know, pays his bills on time, because all his accounts are authorized user accounts. So
Yeah,
that
someone else is
probably wouldn't
paying the
work.
bills.
Yeah, well, the underwriters analyze the credit report for credit worthiness, and you know, you have to have some history of you yourself having accounts and making those payments on time. But like if you have a young, you know, your son, and he's just starting off and he wants to build his credit, I will tell you, if you add him to your credit card and you give him the history, he might have a better chance of actually getting approved for his own trade lines, for his own credit cards and stuff like that. That does help in that regard.
Okay.
But with getting a mortgage, it probably it won't help. So.
Okay. Crystal has a question. Crystal is joining us from California. So she wants to know, do you provide services in both states? Or, and if you don't, maybe you can refer her to someone.
I definitely can refer her to someone. We have some, you know, we have Fairway offices all over the country. So if you send me your information, I will put you in contact with Fairway loan officer in California for sure. But I personally I'm not licensed in California.
Right. Okay. Does anyone else have a question that can talk? I have a question in the chat box. I can read that next if no one else has a question. Okay. So first question is in regards to the don't section. Depositing cash was listed as a bad thing. Does this start when the loan process actually start, after pre-qualification, or when you make the decision in preparing today to buy a home? So basically, if she deposited it 6 months ago, but she hasn't started, does it affect it, or is it from pre-approval going on?
So 6 months ago, we wouldn't have a problem with that. We're only going to ask you for your bank statements for the last 60 days, the last 2 months. I guess that starts at the time that I guess 60 days prior to you applying, or prior to you actually applying for a mortgage. We're going to ask for your 2 months of bank statements. Any cash deposits on there generally cannot be used. To answer your question, it's 60 days prior to your application, but also during your application. So it's both. If during your application you made a cash deposit if I have to, most times I have to ask you for an updated bank account history, because, for example, you gave the earnest money deposit, $1,000, $5,000, whatever it is. I have to show that money coming out of your account. If you made a deposit during that time period, when I ask you for your transaction history, then that could be a problem. And when I say generally, I mean, for example, we're not talking about, you know, $200, $300, $500 cash deposit. Most times that's not a problem. What I mean is there are limits to how much cash or how much money you can deposit without being asked questions. So on FHA, for example, 1% of the purchase price, that's the limit. So if you're buying a $300,000 property and you deposit cash in excess of $3,000, that's going to be a problem. If it's cash, we can't use it. We have to back it out. So by backing it out, I mean, if you have $10,000 in your account, you deposited $5,000 in cash, can't use that $5,000. So now you have $5,000 in your account. That's, for our intents and purposes, we would back it out of your available balance. And so FHA is 1% of the purchase price. That's the limit. You can't deposit anything above that in cash. And for conventional loans, it's 50% of your gross monthly income. If your gross monthly income is $4,000 a month and you deposit $2,000 or less, we will not question those $2,000 or less. So those are the limits. That's why I say generally speaking, because, you know, it's not in every situation. You can deposit cash up to certain limits. So.
Okay. Her next question is, can you please further explain the bad of FHA in regards to insurance? I didn't fully understand that part.
So mortgage insurance is it's an insurance that is placed on your, that you're going to pay monthly for, just like you do for your homeowner insurance. But this mortgage protects the lender in the event in the case if you were to default on your mortgage. So a certain portion of your mortgage is covered by this mortgage insurance. So that's what that is. Now you're going to have that whenever you bring less than 20% down on a conventional loan, you will have mortgage insurance as well. And on FHA, you can bring 20% or 50%. You're going to have mortgage insurance on that loan, and it stays on there. With FHA, what I meant by that is on FHA, the mortgage insurance is there for the life of the loan. So you can pay down your mortgage for 20 years, and that mortgage insurance is going to stay on that. You know, you're going to continue paying that through the life of the loan. On conventional, you're going to start paying mortgage insurance from the start if you bring less than 20%. But once you reach 20% equity in your property, you've paid down your mortgage sufficiently so that you have 20% equity in your property, that mortgage insurance disappears. It'll automatically go away and your payment will be reduced by that much. So that's a difference between the two. And that's what I mean by that. So.
Okay. Her next question is, as a recent college graduate, which she is, my student loans are on deferment for 6 months. Does that really hinder my application?
No, that does not. So student loans are viewed, they're viewed differently between investors. Even if your payment is deferred, we have to apply some sort of payments for your student loan, because we know that at some point you're going to have to pay that money back. So the difference is what are we going to use? How much are we going to apply as a payment for those student loans? So on FHA, you know, FHA is going to use 1% of the balance. You owe $20,000 student loans, we're going to use $200 as your monthly payment. That could affect how much you qualify for. So that's FHA. On conventional, if you're deferred, we use 1%, but you can go into your student, most times you can go into your student loans. I know if you have Navient, you can actually go in there and calculate what would be your monthly payments if you were to enter into an income-based repayment plan. Usually income-based repayment plans have the lowest payment. So if you can calculate for us, what's your income-based repayment plan? Even if a lot of times the student loan company will say, well, based on your income, you're not required to make a payment and your payment is zero. We can use that. So now we don't have to count any payment against you, and that's only on conventional loans. So I would tell you that no, it doesn't hinder you. But we would need documentation. We would need something to tell us how much is your payment going to be once you do have to repay. And you know, there's differences between investors and what we'll use, and it could affect how much you can qualify for. So.
Okay. So I know student loans is a big issue for anyone, for a lot of people. Anyone else wanted any more clarification on the student loan, if you have student loans, before we move on? Okay. Sharnette, you can unmute. Can you unmute yourself? Okay.
I did.
Okay, go ahead, my dear, with your question.
My question is, when you're shopping around for mortgage, for loan for mortgage, shopping with different lenders, that hurt your credit score?
So if you pull your credit once, you got 30 days to shop your mortgage. After 30 days, it starts to have an impact on your credit score. So you got 30 days to shop for a lender.
So okay, so recently I like about 2 weeks ago, I had a guy pull my credit. So if, say, for example, you go ahead and pull my credit now, it won't affect me.
You said 2 weeks ago?
Yeah, about 2 weeks.
Okay, yeah, it's not gonna hurt your credit. Now I don't know if anything has changed on your credit between then and now. If a new credit card, if a credit card reported something on your credit, that might affect.
I don't like Credit Karma because it's not too accurate. However,
not accurate.
I kind of use it as a guideline.
Yeah.
But I know it's not fully accurate. However, after he checked it, I see it went down. I'm on Credit Karma like 5 points.
Mm-hmm.
Well, he did advise me that was gonna happen. So
yeah,
I still don't know the exact score since after he checked it.
Mm-hmm.
Now, when you're shopping for the same product though, Dorian, so if you're shopping for a mortgage and they go to you, they go to this guy that she went to and to someone else, doesn't it count as one inquiry if it's a mortgage company?
Yeah, it'll count as time. Yeah, it's gonna show as an inquiry. And Credit Karma will probably tell you that your credit score went down even further. But Credit Karma is not accurate. So when I pull it, I'm gonna see the exact, you know, like I said, unless something changed in your credit report where a credit card reported a new, the new balance, or you made some sort of purchase and your balances went up. If anything happened between the time that he pulled it and the time that I pull it, that's obviously going to have an impact. But for my purposes, if nothing has changed and nothing has reported, I'm going to see the exact same score that he sees, the exact same thing. And I tested this and I know it's accurate. So what I will tell you is that Credit Karma is going to show that you have an inquiry and it's going to tell you that your score dropped, but I'm not going to see that drop. I'm going to see the exact same thing they saw. Okay.
So Sharnette, I can use myself an example. I applied for the EDIL small business loan with the SBA, and they pulled my credit. I also went to Space Coast and applied for a credit card because, hey, I got good credit now, so I can apply for a credit card. And they both ran my credit during days of each other, and my score was the same prior to both of them pulling my credit.
And that was within 30 days?
I'm sorry?
That was within 30 days?
Within 30 days, yes. And that was earlier this month. And it hasn't changed.
Okay.
Yeah, and I use Experian daily. I'm on Experian every day.
One of my thing is, when I'm sitting around with all these CARES Act money and I want to get rid of it, what is your take on investment property?
You said you're sitting around with all this CARES Act money?
Yes.
So you received some loans for small business?
No, CARES Act money from my 403B.
Oh, you took, okay. Yeah, because there is no penalty for taking that based on the CARES Act.
No penalty. So I'm asking Dorian, what is his take on investment property?
So investment properties.
First time, and I would be a first-time home buyer, regardless if it's investment or for my personal use.
Okay. Yeah. Yeah. I mean, first time with investment properties. Yeah, there's going to be a difference, even though rates are low. And it's probably it's a good time to buy, whether it's primary or investment. I mean, rates are low, but there is a difference in what the rate you're going to get if you buy it and you say right off the bat, hey, this is going to be an investment property. Investment property rates are not as low as primary residence. There's obviously a layer of risk there for the bank when somebody buys an investment property because you know, it's not your primary. So, you know, if something happens and you know you need to stop paying your mortgage, the first thing you're going to stop paying is probably your investment property, not your primary where you live. So that's why the bank looks at it as more risky, and so therefore there's an additional the rates are usually higher on investment property. So if you're going to buy something and you don't own any property, you know, I would tell you that you might want to buy a primary residence so
first. Yeah.
Okay, thanks for your input.
No problem.
I have another question if no one else has one.
Sure.
For you guys and your services that you offer, is it just for Florida, like Miami, Florida, Broward? Like I'm thinking about purchasing before I was looking at staying here, but now I'm looking at going to Tampa, that area. Would you guys cover that area, or would you recommend finding someone locally in that area?
So Dorian is licensed in the state of Florida, so he can help you with your mortgage.
Yep.
Through a bad experience from a former client, I no longer travel that far, but the location have real estate office in Tampa, so I can refer you to someone else. Yeah, so if you're looking for Tampa, and if you're serious, now this girl was kind of on the fence, and I kind of had a lot of, you know, faith in her, and got to Tampa and she never showed. And I got into a car accident.
Wow.
So yeah, so because of that now, you know, I go for St. Lucie, Jupiter, I go to Naples, you know, because I travel to those places regardless. Tampa and Orlando, I kind of mark those off my list unless I know this person is going to be there, you know.
Let me ask you this question, because in Tampa, I've noticed, of course, I've been on the sites looking, they have a lot of new construction homes, right? But with FHA and down payment assistance programs, isn't there some kind of thing like, are you eligible to apply for a new construction with those types of programs, or they're looking for you to be in a specific zip code where a home already exists, the neighborhood?
No, you can buy. You can.
Go ahead, Dorian.
Yeah, you can buy new construction with down payment assistance. That's no problem.
Okay.
Yeah, as long as of course, the city that's providing down payment assistance, the construction is in that city, unless you're doing the state down payment assistance.
Okay,
right.
So I'll contact you afterwards, and you can tell me based on the area if you can help me with the process where I'm looking at, because for my job I'm looking at relocating. My company has offices everywhere, but I'm looking at relocating to one of the offices there because there's so much more opportunity there in that area for our company. And so yeah.
And home prices are a little less expensive up there.
Yes, for sure.
So yeah, I'm not gonna tell you no, Miss Annette. You and I will talk, and we'll go from there. Okay.
Okay.
All right.
Okay.
Anyone else have any more questions for myself or the lender? Go ahead. You can unmute yourself. Was there anything that you were expecting to hear about and you didn't, that you like covered? No? Jerome, are you still there? So if you were in my class, I call on people. I'll just start pointing. Do you have a question? Do you have a question? So Jerome, are you still there?
Yes, I'm still here. Sorry about that.
That's okay, Jerome. So when you saw this webinar posted, I don't know if you saw it on Facebook, Eventbrite, and you said, oh, I'm going to join that. What was your reason?
Just basically to, get some experience on just the first time home buying process. It's my
Mm-hmm.
first time looking into buying a home, and I just wanted to know what to expect and what I need to have in place, to make the process smooth.
Okay, so do you think that you have the initial start then based on what Dorian's gone over? Do you think that
Yeah, yes, I've had some idea uh, of what I might need, but I'm much more clear, with regards to solid numbers that I would need in order to really be considered you
okay,
know uh, in the loan process. So
okay, all right,
yeah, I mean, it seems like with the information that I'm pretty much prepared for the most part, but I think my only setback would just probably be the credit, and I'm working on my credit right now. It's funny the young lady mentioned Lexington Law because that's what I'm using now.
No, no,
no, look,
stop. I did better on my own than with them. I'm just being honest.
and I know
Better
other
on my
people
own than with them.
absolutely no, listen, listen. Dorian has a person that he uses for credit repair. I'm gonna
Ooh.
be straight up and upfront with you guys. I don't believe in this whole credit repair thing, right?
Mhm.
I have screwed up my credit, and Dorian have heard me told this story before. I have screwed up my credit more than once, mashed it up, done. And I have built it back up myself without paying anyone a dime. Now,
Yeah, I had a
the
friend tell
person
me that
Dorian
too.
has
Yep.
is someone who's been in the market in the credit repair industry for a very long time. Be careful of the fly by night people. Make sure you're
Yep.
getting somebody that is very, very, very experienced who can help you with your credit. And don't let them just tell you just nonsense. Please be careful.
Right. Yeah, I mean, I'm familiar. I've actually done pre-legal, and so I know kind of the process of trying to repair my own. But I didn't have the time really. I didn't think I had the time to go through calling all these people. So I thought it would just be better for them to do it, and I said I would just wait and see, what they're going to actually do for whatever amount they was going to do it.
Mhm.
And you know, I've had some things removed, but I don't know. I don't know whether to be comfortable with, what they're charging me because it's to me it's not really a whole lot compared to actually getting my credit score up there and getting it repaired and getting some things taken off. So I'm looking at it as, a minor cost, you
Mhm.
know, for what they're actually doing. But I don't know, I don't know whether to continue on with it and see uh, where it goes, because so far I've been getting a lot of things removed off the report.
Okay. So here's what I would say about anyone who and I always say this to people, and I say this in my seminar, in my in-person seminars. When you're looking to buy a house, right? Some of the mortgage companies aren't looking at every little negative item on your credit report. So
Mhm.
you're basically paying someone to remove things off your credit that may not need to come off because it may not be that important. So you're doing this pretty much blind.
Mhm.
What I always suggest to people is that you have a lender look at your credit report and tell you what needs to be removed before you pay someone to do that. Because otherwise, you're just removing things. But for what? What's the purpose? A mortgage lender may not care about the things that you're removing.
Right.
You always
And
have a lender first. Look at your credit. If you decided I want to buy a house and I want to buy a house in 6 months, my credit score is only at a 520 or a 560 or a 540. Don't just run to the next credit repair person. Find a mortgage broker like Dorian and say, hey, this is what I'm thinking about doing. Can you please pull my credit report and tell me what I need to do? And you go do exactly what he tells you to do. And I
Thank
guarantee you,
you for saying that so
yeah, that
much.
makes
Thank
sense.
you. Yeah. I
Thank
didn't
you.
do
That
that
makes-
part. So thank you for
Do
saying
that.
that.
For anyone else here listening, do that. Talk to a lender first and let them tell you, this is what I care about, and I don't care about that. Go fix this. This is how you fix it, and come back.
Oh, awesome.
Okay.
So
All right,
I was.
Dorian, you getting the call.
Mhm. Thank you. Thank you.
Yeah, for sure.
You were going to say something else, Jerome?
I was saying, you know, as far as contacting, you know, getting in contact with lenders, um, what I need, like, because I know they were saying you need like a credit counseling certificate or something showing that you've took some type of counseling. Do I do that? Do I get in contact with the lender before that or after that? You know, when should I be, you know, getting in contact with the lender during this, you know, first time home buying process?
So you're talking about the down payment assistance by the city or the state. That's where you need the certificate. So are
Oh,
you
okay.
looking for down payment assistance from the city or state?
Yes, it was something I was looking into. I mean,
Okay.
it was something I wanted to be interested in.
Okay, so yes, you would need to take the home buying counseling from a HUD certified organization. The Urban League has one where I will be presenting as well on October 16th. You'll need to take it with them, Oasis of Hope, maybe the city, one of the cities if they're offering it. So that's where you get the certificate from. And then you contact the lender if you're going through the down payment assistance program. They need a certificate in order to qualify you for that.
Okay. All right. So if I didn't need assistance, I can just, you know, how do I go about choosing a lender that fits, a lender that would, because I was looking more like for FHA, something where the credit is not, you know, so much a factor in the loan process.
Hmm.
So talk with Dorian first, since he is our business partner for today.
Yeah.
Okay.
Go ahead.
What did you say your score was at the moment, and where did you check that?
My score, I don't know for sure right now because I've been with Lexington Law for about a month now,
Okay.
and they're sending me notifications saying that the score have changed. The score have changed according to whatever things they were getting pulled and getting taken off the score. So I don't know exactly where the score is at now.
Hmm.
But I'm thinking it's like the higher end of maybe like 580, maybe 600. It could be right now, and it could be about 620.
Okay. Yeah, I mean, look, I can I would tell you first, if you can go to myfico.com, see what your score is on there. But regardless, I can definitely if I can't do it for some reason because the score isn't high enough, I can direct you to somebody who can, and they can take care of you just the same. So no worries. Yeah, just
Okay.
reach out to me and let me give me your information. We'll talk.
Yes, we'll do. We'll do.
And if anyone is afraid of having the lender pull your credit, go to My FICO Score or even Experian. Pull your credit, save it as a PDF, email it to Dorian. And you're just looking for counseling at this point, right?
Yep.
So will that affect my credit score? You know, when he pull my credit report. I mean,
No,
just
yeah, if you pull it yourself on one of those services that Karen mentioned, no, it doesn't affect. If I pull it, yeah, it'll uh, 1 or 2 points max is what I see the difference in when we pull it. So because it
okay.
is a hard inquiry.
It's not gonna hurt you at all when the mortgage. We're not talking 20. We're not talking when you go to a car dealer and it goes down 20 points
Right.
before you leave there. We're not talking
Yeah.
about that. We're talking less than 5 points.
Yeah.
Okay.
And Jerome, I just to let you know, because you're in the boat I am, we're building up our credit score. One of the things that helped me is that I learned that with the open credit cards that I have. Before, I used to think just keeping it at 33% and I'm paying it on time. But the trick is to really get that score to boost is keeping that card less than 10%. If it's less than 10% when it reports, that really help your score boost. So if you got any credit cards and you got them like at 33% or they're at 50%, if you pay them things down less than 10%, you'll really see a boost to your credit score as well.
Okay. All right. Thank you. Thanks for that.
You're welcome. Oh, and for you, Miss, I'm sorry, I'm going blank, Miss Karen. With you, the counseling thing that you're gonna do through HUD, we would contact HUD if we want to get involved in that to make sure we can.
No, it's through any of the nonprofit organizations in Florida that is HUD certified. So I deal mostly with the Urban League. I know Oasis of Hope have them. There's a center in Opalaka that does it. I cannot remember the name of it. I have a really good realtor friend that she does their seminars there. And
If
some
I
of
do
the city
this
does
here,
provide their own as well. I'm sorry, say
if
that
I if I do it here, like through one of them, would that apply to me being able to get down assistance program in Tampa? Or do I have to find, that's the trick, I don't know.
So as long as it's HUD approved, I don't think it matters where you take the class.
Okay.
It only matters then where you're applying them for the money. Because if you're going to Tampa, then you can't apply to Hollywood.
Okay.
Okay.
Right.
So as long as it's HUD approved, no matter where the HUD homes are being offered, that certificate would still be valid.
So no, if you are applying to Hollywood, then you have to buy in Hollywood. If you're applying to Davie, you have to buy in Davie. If you're applying to the state money, then you can buy anywhere in the state.
Okay, I mean, what I mean is even if it's HUD approved, no matter what state HUD is in, you would still have to get certified in that state.
Oh, so like say if you decide to go to Maryland or something like that?
Yes.
I'm not sure.
Like what I was saying is if I took the Homebuyers HUD approved class and got certified here in Maryland, would it be valid for Florida HUD homes?
Yeah, I'm not sure about that. I'd have to find out. I've never had anyone ask me that question before. Sorry.
Oh, that's okay. I was curious about that. Would I have to, like, if I moved to Florida, would I have to get certified all over again for HUD home?
So where are you, Jerome?
I'm in Maryland.
Really?
Yes, I'm in Maryland.
All right. I didn't realize I had so many. Someone else asked me what state I was in. I guess because the event was online during that, a lot of people picked it up. That is so weird. I've never had out-of-state people on these. Something I'm missing. Yeah. Well,
it's probably even bright.
Jerome, so welcome. Hopefully you get to move here to Florida. It's way better.
I know it is. I heard it is a lot better. I like to see for myself.
Oh yeah, come on down.
I'll try.
But yeah, so if you know anyone live in Maryland or Florida, make sure you give them my information, Jerome.
Yes, I will. I have a lot of people that have, talk about moving to Florida. I had relatives that lived down in Florida, and some good stories, some bad stories. It's always a trade-off.
It's always a trade-off. It's all in where you live and your perspective and what you want out of how you want to be happy, how you want to live to be happy. It's all about that. You can't really go by everybody.
Well, I had enough of Maryland. I think I would have had no problem moving down there if I found the right house.
Doran and I are here to help, and Doran and I are here to help anyone that's want to get out of Maryland in the cold. We are here to help them get some sunshine.
Yes. Yep. I'm ready.
Okay.
Can you give us the contact information again? Because I know Dorian put it up, but because it was a presentation, I didn't get to snip the information. Let me just.
Yeah, we'll send it out.
So will
Okay.
that be, so will
I'll
that
put
be
it up.
information? I'm sorry.
I was just gonna
I
say
was gonna ask,
I'll put it in the chat, but go ahead. I'm sorry, man.
I was just gonna ask, will there be information given to us, about the, the properties and the terms and, what we might need as far as, some things you guys got going on down there and what we can possibly be, qualify for?
Yeah,
So
I
I can
can.
send you all the properties in the world, Jerome. I can send you a $200,000 property to a $2 million property, but what do you qualify for in the middle of that? So there's no,
Yeah.
so it's better to always know what you qualify for and look at those prices instead of looking at something.
Right. That's basically what I'm saying. Yeah.
Right.
Yeah.
So once you talk with Dorian and if you're coming down this way, then yeah, we can. I no longer have access to the MLS in Maryland.
Okay.
And I have a pretty I have a pretty resourceful website called DorianDoesLoans.com, where you have a lot of information on there. You can schedule a consultation with me, or you can even apply on that website. And it's DorianDoesLoans.com. There's a lot of information on there you can see.
I got it. You spell your name Dorian?
That's correct. Yep.
Gotcha. Yep. Thank you.
No problem.
Okay, everyone's asking for the slides, so we'll get the slides out. We'll get the
Okay.
slides out to everyone, so you have some backup information.
Yep. Karen, I think since you have everyone's I guess when they RSVP, they gave them. Yeah. Okay, I'll send it to you, and you can send it to everybody else.
Yes, I will. I'll do that. Okay, so we're at 12:20. Anyone else have any other questions? I'm dog sitting for a girlfriend of mine, and I have these two little rat dogs. And then my cat is like, he's so curious and trying to figure out what they're doing. So I keep having to keep them apart underneath the desk. All right, guys. So again, I thank you all for taking the time this morning, and for all of the out-of-state people for joining me. Thank you so much, California and Maryland. I appreciate you guys coming on.
Thank you.
Just let us keep in contact with us. Let us know if there's anything that we can do, even though we're out of state. I do have our realtor friends in Maryland. I don't know anyone in California, Crystal, but we can help you find someone if you so choose. And Dorian can help you with getting a mortgage there as well. He can refer someone to you. For everyone else that's here in sunny Central Florida, I hope you guys have a wonderful day. My next seminar will have our financial advisor, Andrew. Please look out for that. So if anyone need advice on how to save more money, maybe life insurance policy if you don't have one, IRAs if you don't have one, it is not a recruiting event. I do not do that. My business partners are here to help my my clients and my prospects and my attendees to the meeting. So he will not be here to recruit you to join Primerica. He will be here to give you financial advice. You can schedule a one-on-one with him for free after, if you so choose. Then I will also have a home inspector for another webinar. So normally I have all of my business partners at once. I decided not to do that with the webinar because I don't want to keep people on the webinar for hours and hours and hours. So I've broken up the presentation. So we have the mortgage person one day, the advisor the next day, the inspector another day, and the title company on another day. So usually I do about 2 or 3 of these per month. So if you wanted to continue on with the home buying process, like Dorian talked about in the slide, please look for, and I will send you the invite to the next one so you can get the full grasp or the full picture of what the home buying process is. I have put my number and email address in the chat. I have a website that you can also visit. It's KarenMitchellPA.com. I have some articles out there. You can search for properties. You can get on my mailing list if you so choose. I'm on Instagram and Facebook. And actually this webinar was running live on YouTube this time. I didn't do Facebook this time around. I did YouTube this time. The recording will be out there if you need to go back to anything. Dorian, any final words?
No, I just want to say thank you guys, everyone, for joining and for giving me the opportunity to speak and educate. And I'm always here to answer questions, and all my information will be provided to you guys, so you can reach me via email, phone, text, whatever you want. I'm always here. And thank you guys again. It was a pleasure.
Okay, any last questions before we go? Any last thoughts? No?
Thank you guys both. It's very informative.
Thank you. Please share, pass it along to anyone that you think might be interested in the process. They can reach out to me for the next webinar, or we can do one-on-one sessions. I do one-on-one sessions, and so does Dorian. He also does one-on-one sessions if you cannot make webinars. Okay.
Okay.
All right, guys. You guys have a wonderful, wonderful Saturday, and please continue to be safe. Stay away from this COVID stuff that we have going on. And if you're not registered to vote, go do that.
All right.
Okay.
Thank you.
Thank you. Bye-bye.
Have a good one.
You too. Bye-bye, guys.
Bye-bye.
That was good. Okay.